But let's talk about the tariffs impacting inflation yet. Well, the Consumer Price Index, also known as the CPI, in the month of June showed an annual increase of 2.7%, which was in line with the expectations. Now, core CPI, which excludes food and energy, came in at 2.9% and was also in line with expectations also. It was also slightly above May's reading of 2.8%, but giving all the news around tariffs, well, I got to say, I think most would be surprised to see the limited change in prices given all the concerns we're going through, and we keep waiting and waiting and waiting. We get the news like, oh, no, nothing too bad there.
Yeah, I mean, I definitely am surprised. I mean, I thought we might see something in the threes as these tariffs are coming, because they're out there. I mean, it's not like they're not happening. I mean, they are now part of the economy, but, I still think maybe it'll be down the road, but we'll have to see what happens.
Didn't we get the lowest number, correct me if I'm wrong, I think it was like 2.4%. Did we get down to 2.4 at one point?
You might be thinking headline. That's very possible. But I know the core, the lowest we've gotten since the inflation debacle, I'll call it, a few years ago, has been, I believe, that 2.8% level. Which again, that core level is going to be, I'm going to say, more important to what the Federal Reserve is looking at in terms of cutting rates. The headline, I mean, I was looking at energy. Gasoline was down 8.3% year over year. That's going to go away at some point, and that headline might actually go up even more because you're not getting that large benefit that you're getting from gasoline. So I think it's important to look at headline, but also important to look at cores. I think that is the more important number the Fed will consider.
Yeah, I mean, it's kind of, you got to look at both, because the headline number is important, I think, too, because we do use a lot of food and energy, and I know
it's part of our daily expenses. You can't not look at it.
We tell people they take it out because it's so volatile, and that's why they take it out. But it's still important to look at that headline number as well. But it depends what the Fed looks at, too, because you and I can't move interest rates.
Yeah, I mean, speaking of the Fed, I mean, one thing we talk about is I think some economists, they're still trying to reason with these tariffs. And I got to say that some of them pointed to areas like apparel that had an increase of 0.4% compared to the month of May and said, you see, that's where the tariffs are coming in. And I got to say, my concern with pointing out limited areas like that is prices are going to be volatile in those categories when you're just looking at one specific data point. And also, too, I mean, if you look at apparel prices compared to last June, they actually declined 0.5%. So in my mind, that's a terrible thing to look at. Also, too, the thing I was surprised by is, what would you think is one of the most impacted areas from tariffs?
I would say, well, apparel, because I think a lot's imported. Cars, because
Cars.
Yeah.
Cars is what I was thinking. In the month of June, month over month, new vehicles actually declined 0.3%. Year over year, it was up 0.2%. So I'm pointing that out because I just don't think the tariffs are really working their way through to these prices yet, because vehicles, I think, would be one of the most impacted by the tariffs.
And one thing, too, we do bring out, month over month and year over year. And sometimes you'll hear numbers like, oh, see, that's terrible. But it could be just a month over month. But when you look at year over year, that's the reality of what's really going on, what you paid over last year, because things can be volatile, or the previous month you could have a drop. So that's why we like to look at year over year. We do always give you the month over month, but still you got to look at both to get all the information.
No, absolutely.
So, shelter. And we've talked about shelter for years, and it's becoming less of a problem for the report, but it is still the largest reason why inflation remains stubborn, considering the annual increase was above the headline and core numbers at 3.8%. It's so frustrating because we've talked about shelter for the longest time. We don't really like the way that they calculate shelter, how they do it, but it just continues to add to it. And it's based on a calculation of rents, or the equivalent rent that people will be paying. It was some weird number. You got the number?
Two categories. Well, it's rent, which if you're paying rent at an apartment, I mean, that feeds into shelter costs. But also the other aspect is owner's equivalent rent, which is you ask people what they think they could rent their house out for. And the issue with that is, when we had home prices surge years ago, the shelter component was not going up that much to reflect that. It almost kind of elongated the runway for shelter being a problem in the inflation report, and we're continuing to see it. I did not think it was going to be this long of a runway, but it's still there. I mean, you could have a decline in home prices, and shelter expenses could continue to be elevated like we're seeing.
Well, and the equivalent rent is a real problem because what people think they can get for their rent, they're always going to be high. Everybody always thinks their house is worth much more than everybody else on the block. I mean, that's just something that you're going to come with a high number. I don't like them using that number.
I think it's a terrible thing as well because not even do you think that your house is many times worth more than it is. Most of the time, you might not even know a neighbor in the neighborhood that's renting a house. So how could you then come up with I think my house is worth $1 million. I think I could get 5. Like, you don't even know what we could get for rent. I think it's just a ludicrous idea. To me, it should almost be something similar to, what we see with food and energy, how we back that out of the headline. Right. I almost think that should almost be similar with home prices, where home prices and rent would be something that are calculated in inflation, but you kind of back it out like you do with food and energy because it's going to be more volatile than what we get with the owner's equivalent rent. But I just think that's a terrible calculation.
There's got to be a better way to do that. I'm just not happy with that one. And we still talk about it because it's there. It is a number we use, but it's just still we look at it a little bit different.
Yeah, and I mean another thing we look at too is it's going to be the producer price index, and that was something that came out this past week as well. And I thought maybe since we didn't see a large CPI print or a large surprise there, maybe the producers are kind of eating the cost, so to speak. Not looking that way. June PPI showed an increase of 2.3%, which was below the 2.7% reading in May, and actually marked the lowest level since September 2024. And then core PPI, which again excludes food and energy, came in at 2.6% on an annual basis, the smallest gain since July 2024. So producers, consumers haven't seen that price increase just yet.
And it was amazing to me that the producer price index was lower than the CPI because generally, you'd think that the producers would add a little bit more to it, and they don't seem to be doing that. They seem to be doing less with the PPI being lower. You got something on that, don't you?
What do producers not have? Owner's equivalent rent at 3.8%. So that 3.8% is not part of that reading.
That's right. So that kind of shows how bad that reading is because of that equivalent rent. Yeah, that we should come up with something better on that. But perhaps one thing we continue to discount in the U.S. economy is the fact that it is driven by services rather than goods, which could help reduce the burden of tariffs because there's really, I'm going to say this, and I may be corrected here, that there's really no way to put tariffs on services that I can think of.
Yeah, I'm just going to I always seem to use my barber as an example.
You
when
like
I'm
your barber,
don't
you?
I like my barber. He's a great guy. I've been going to him for, about 6-7 years now. But, him having tariffs, maybe the products that he would be buying, scissors, things like, there's not a lot of products that he would be buying on a regular basis that would be impacted by tariffs. He doesn't use hair products on me, so that's not going to drive higher costs. So his service should not be overly impacted by tariffs. He's not going to need to increase prices by, let's say, 20% to offset tariffs. That's just one example of a service, but there's other service businesses that, again, would have very limited impact from tariffs. Our business, I guess you have the volatility of the market from tariffs, but nothing would really have a large impact. Our printer company, they put a tariff fee on us for our printer supplies, but that's such a small part of our business. There's so many service businesses out there that likely would not have to increase prices to offset tariffs.
And I believe the number is still about 70% of the GDP does come from services. I think that number is still,
it's a huge part of the economy. So maybe that is a reason why we would not see as large of an impact from tariffs as people are thinking. Yeah. So, and I want to be clear. I still believe we will see increasing prices from tariffs. You have them on there. It is going to drive higher prices. There's no way that it doesn't. Prices aren't going to go down from tariffs, in my opinion. But I still don't think it is going to be as bad as some other economists have pointed out. That's it.
That's it. We got nothing else on the impact on inflation. The month of June, I guess. Okay, so tariffs. That's good news for people.
Yeah, I still think it is something to keep an eye on, but so far, limited impact from tariffs is what I would say.
We had a blank there because it's kind of like you feel like there should be something else, but no, that's it.
That's it.
Okay.